Well, good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. Today is Friday. It's the 5th of March. It's the last trading week. It's the end of the first trading week of March. I'm all over the place. All right, let's start with the markets. The futures are up. Yesterday they were down before the opening. They were mixed, but right now they're positive. As a matter of fact, the Dow's up about 100 points, a little less, give or take, about 95. The Nasdaq is solid, and even in the S&P and the Russell. So everything is slightly higher. In terms of where we're at right now, well, the Nasdaq is in the twilight zone, which is the difference between the 50-day moving average and the 200-day moving average, which tells us we got to pause right now and not trade Nasdaq large cap stocks. The interest rates are impacting them. It's not having as big of an impact on the rest of the market, but it is having a pretty nasty impact on the Nasdaq. Now, looking at the S&P 500, you will see that we are violating the 50-day moving average, but we are a lot higher, a lot stronger. And if you look at the Russell 2000, you will see that we're just now touching the 50-day line. So, and also look at this, look at the Dow Jones. Not really that bad. The real culprit here, look at that, barely touching it. So the real culprit here remains the Nasdaq, all right? The Nasdaq 100. It's almost there, and I think there's a good chance we will hit the 200-day moving average because I've only been telling you guys for 3.5 months that momentum levels are just out of whack and the market is stretched out and is overbought. So I think we may kind of humper around this area, see where we stand, but I'm not expecting a huge meltdown. Why? Because certain sectors are making all-time highs or are sitting near all-time highs, like energy, financial, or at least breaking out above last February's high. Industrial, transports, energy, what else? And a bunch of cruise ship stocks, but that's transport. So you got industrial stocks, transport stocks, energy stocks, and financial stocks. Usually when the market becomes bearish, it's not specific to one sector. And in this case, it's fairly specific to interest rates or stocks that are impacted by interest rates. Now, this is the 20-year Treasury note, and we looked at it a few days ago. It went from 0.93 to 1.5. Remember, it's inverse. It's inverse of bonds. This is the bond market. Interest rates are opposite. And I told you we're going to go up, and then we're going to start coming back down, and we're coming back down. And let's talk about what the Fed has to say about that now. But interest rates are going higher. There's no question about it. There's only a question of whether the short-term rates will be able to keep in line with the long-term rates, because short-term rates are staying stable, but long-term rates are going up, and there's nothing we can do about it. It's just the way it is. If Fed is giving you higher interest rates, then bonds that were previously issued are going to go down. They're not as attractive. It's just that simple. So again, let's talk about what we should expect from the market. What's the threat? What's the opportunity? And by the way, the reports that you need to know about today, we've got employment data. This is coming out in about 20 minutes, 18 minutes. Consensus is 175,000. We had jobless claims yesterday, and the number was in the 700,000. So we're making some headways. We were below the 4-week moving average. But again, look at this, negative 100,000, positive 312,000. We're at 175,000, and I would love to see an increase above 175,000. So if the number's above 175,000, that means there's more people applying for work. If it's less than 175,000, like last week, the disappointing increase of only 49,000, that's bad. And also keep your eye on unemployment. If the unemployment is above 6.3% or like 6.4, 6.5, going to be bad. So two things to look for: higher unemployment and lower number of people hiring increasing. So we want a number above 175,000, and we want a number that's lower than 6.3 or 6.3. That's what we're looking at. Another report that's coming out is international trades of goods and services. And last time we had a deficit of 66.5 billion. We're looking at a deficit of 67.5 billion now. It's widening. We don't want this to widen. We want the number to go down. So any number lower than 67.5 billion would be positive. Now, in light of all of that, let's talk about what we can expect from the market, what's going on. Let's look at global economy on a fundamental basis. And this will reinforce a lot of what we just talked about, okay? So U.S. futures fell Friday after surging bond yields, renewed selling pressure on high-flying technology. That's what we're talking about, technology. It's not really looking great. It's looking lower. And yes, bond market, as you can see here, is renewing its downside. Lower bonds, higher interest rates. So again, I just kind of want to give you a full picture of all of this. Investors were disappointed with remarks from Jerome Powell, who can't keep a secret. I'd love to play poker with this guy. He can't keep his mouth shut for a second. He tells us everything U.S. is going to go through 2 years in advance, which is not really great. On Thursday, when he said inflation will likely pick up, gee, you think so? In the coming months, though he cautioned that the increase would be temporary, could be, and would not be enough for the Fed to alter low interest rate policies to set to help economy recover from the pandemic. I agree with him right now. I'm going to tell you something. The market right now is expecting interest rates to be at about 2.5%. That's about a full basis point. That's a full handle above where we're at right now. We're about 1.5%. The current forward earnings, earnings per share on the S&P 500 at the end of 2021 is implying interest rates yield of about 3.5 to 4.5%, and there's usually a 1% buffer. So the stock market's already pricing in higher rates than they are right now. I wouldn't worry too much about that. So I see what he's saying in this case. Powell did not indicate that the Fed might seek to rein in rising bond yield, which tends to draw money out of stocks into less risky bonds. It's going to just wash out how it's going to wash out, folks. But I think people are going a little too crazy with this interest rate thing. Because look, long-term rates are still at 1.5%. We're not at 5. We're not at 6. We're still not at 7. And the stock market will adjust for it. Chinese Premier announced annual growth target of 6% at the opening of the annual session of ceremonial national legislature. If they can do over 6%, God bless them. I'd love to see that. As the economy reopens this spring and summer and vaccines are distributed and COVID retreats, many economists expect a spending boom, especially with us getting all this money from the Fed, right? That will stretch available supplies of goods and services and likely push up prices, he said on Thursday. And I agree with him. Yield on the 10-year Treasury note jumped to 1.54. Bonds going down during Powell's remarks from 1.47. And Thursday, OPEC members agreed to leave most of their existing oil production in place. There's still so much supply of oil, but prices are moving higher. And Senate is moving forward with President Joe Biden's stimulus bill, with most of the negotiations now happening between more moderate Democrats and the Senate. It'll happen. Again, investors are waiting for the jobless claim reports. Economists surveyed expects 225 jobs last month. And they're actually not. They're expecting 175,000 new jobs, anywhere from negative 100,000 to 312,000. So the consensus is actually 175,000. I don't know where they got, because I'm looking at Econo Day. So I don't know where it is. But again, any number above 175 should be good. Any number below 175 should be lower. I'd love to see 225. I'd love to see 312,000. But I don't know if we're going to get that. Again, that report comes out in about 12 minutes. Now, let me talk to you about the stock market. The stock market is repositioning itself. A lot of the stocks that were going higher a year ago, like Equifax, like Clorox. Remember Clorox? Like Verisk, like American Towers, like Domino's. Remember, people were staying at home getting pizza delivered. Best Buys. A lot of these stocks are going down. Digital Realty Trust. People want to go back. They want to go out. So you're seeing a lot of stocks that were in the crapper, for lack of better words, starting to go up. So keep your eye on these stocks. These are new stocks that I'm seeing on the upper end of the S&P range. Now, I told you about Viacom. They're launching that streaming service, but here are some stocks that you need to pay attention to. MRO, Occidental Petroleum, Diamondback Energy, yes, Norwegian Cruise Lines, Carnival. We're finally there, folks. We're finally there. Now, here's the thing. I want to make sure that any stocks that I talk about right now, it's got to be trading above last February's high. If it's not trading above last February's high, I'm just not interested in it. But I do like these stocks, and I like what's going on with them. I like seeing these stocks now going higher. I mean, we haven't seen these type of stocks on the upper echelon of the upper range of the S&P in a while. U.S. Marathon, that's an energy company. This is a cruise line company. This is another energy company. So you got energy stocks, FANG. Oxy, MRO, Carnival, Norwegian. So cruise ships and energy stocks. And these sectors, transports are near all-time highs, and energy stocks are higher than they were last February. But if you see a stock that's not higher, I'd be cautious on it. Now let's talk about the Nasdaq. Want to give you guys a good review before we go home on Friday. So Expedia. Remember I told you Expedia is moving higher? It was like a week ago. Let me see here. Let's see Expedia a month ago. Was it on here? Let's see here. Yeah, it was all the way down here, and now Expedia is all the way here. So I like Expedia. I like Micron. Micron has the DRAM, and DRAMs, they have 50% of the DRAM that's needed for electric cars, self-driving cars. So Micron is hot right now. I mean hot. And so is Applied Material. But let's see, Marriott. I think Marriott is going to go higher. I think Trip is going to go higher. And I think Ulta Beauty is going to go higher. So I like these stocks. These are like the opposite of, these are the going out stocks, all right? Expedia, Marriott, Ulta Beauty, and Trip. Follow those stocks and keep your eye on Micron and keep your eye on, where's this other one that I was looking at? Yeah, so you got Trip, Ulta, Marriott, Micron, Applied Material, and Expedia. I think Expedia and Micron and Marriott, they're going to go higher. I think so, because people are really looking to book trips and so forth and so forth. So I think markets are going to go higher, but I think we're going to have this little thing going on with the bond market. Large cap tech, you don't want to be in right now. Smaller tech stocks, non-tech stocks, stocks that were hiding last February, March, April, May, June, those are stocks that are breaking out. It's time to look back. I wouldn't look at this as a correction. I would look at this as a repositioning of stocks that hedge funds are doing right now. Now, folks, I've got something important for you. If you've ever been relying solely on fundamentals, technical analysis, earnings dates, buy and hold strategies, even momentum, you should stop what you're doing right now. I mean it. It's time to throw out the playbook, because this former Wall Street analyst, he's been working on a special project, and he's going to show you how to capture massive gains, sometimes in just a matter of days. I'm talking about gains like 566.67% on LJPC in just 1 week. Can you imagine making 566+% on LJPC in 1 week? Man, that sounds good. And after months of investigations, he's finally ready to reveal everything he's discovered. You've got to check this out. Former Wall Street analyst talking about massive triple-digit gains, stocks like LJPC, not Micron or Amazon, stocks that are flying under the radar. And after months of investigation, he's finally ready to reveal everything he's discovered. You've got to check this out. Follow the link to learn about this former insider's secret before the next market move. Do it now. Follow the link. Do it now. Check this out. You've got to get in on this. Do it now. And have a great weekend. Bye, everyone.